Bitcoin has taken a bit of a hit in recent weeks, and while it is expected to fully recover in the short term, there have been murmurs in the financial sector that in the longer term, the decentralized network's golden child could be heading for choppy waters. Some moneymen have even suggested that in the future, it could be worth nothing. Today, we are discussing these claims by the Bank of England. Stay tuned. First up, why has Bitcoin recently slumped? The first major cryptocurrency, Bitcoin, took a pretty big hit this autumn as new measures from China aimed at curbing how much energy is expended while mining the coin drastically decreased its price. In early November, the coin lost almost $10,000 worth overnight, as did the second darling of the crypto industry, Ether. One theory which seems to stack up is that cryptocurrencies are the playground for sharks, people who know what they're doing and when to liquidate their coin, so market manipulation also plays a big part. It is all to do with something known as Tether. Backed by an equivalent dollar value, supposedly, it appears that 3 billion tethers, backed by nothing, were used to pump the price of Bitcoin up, but it all stopped abruptly and the price of Bitcoin was drastically affected. Some people have argued that this kind of fake liquidity happens regularly, and the market always realigns, but it is certainly worrying that this sort of thing happens so often. Another reason for the recent slump is people stockpiling Bitcoin, which comes as a byproduct of the news out of China earlier in the year. The miners, who felt threatened by the new Chinese reforms, upped and left to the US and Canada and decided to stockpile their own supply while they were at it, until they knew more about what would ultimately happen. Do you own any Bitcoin? Let us know below. So as the Bank of England said recently, well, surprise, surprise, the guys over in London have claimed that crypto, as an investment, has no intrinsic value, and that investors should be prepared to lose everything they have put in. This smacks of worried bankers trying to badmouth an industry that threatens their very existence. We know that 2021 has been a super strong year for crypto, from Bitcoin all the way down to meme coins such as Doge, thanks to Elon Musk's backing. Bank of England Governor Andrew Bailey was asked recently what he thought about the rise of crypto, and he had this to say: "They have no intrinsic value. That doesn't mean to say people don't put value on them, because they can have extrinsic value, but they have no intrinsic value." Bailey went on to warn people pretty abruptly that they should only buy cryptocurrencies if they are prepared to lose all their money. Cheers for the advice, Andrew, but it was people like you who lost a ton of people's money back in 2008, so forgive us if we take your words with a pinch of salt. The UK's Financial Conduct Authority had a similar warning. They said that investing in the new currencies involves a high risk, again echoing Bailey's message that they should be prepared to lose their investment. It really does look as though the traditional financial institutions are panicking that people are actually catching on to the fact that they don't need banks anymore. Where do you stand on this? So what else has been said about Bitcoin? Let's see. As we know, the popular coin is up more than 90% in this calendar year alone, which is largely due to investment from Elon Musk's Tesla, who purchased $1.5 billion worth of the coin earlier in the year. He also caused mass panic and a drop in price when he pulled out his investment until they find a more eco-friendly way of mining Bitcoin. Maybe you can find a way, Mr. Resident Genius. Must be nice to be able to play God with other people's money. Bitcoin backers see the coin as something similar to gold, given its limited supply. There are only 21 million available, so people see cryptocurrencies like Bitcoin as a hedge against inflation, as banks are printing more money to stave off panic in the COVID situation. People who think it's a scam view Bitcoin as a bubble, which will sooner or later inevitably burst. Bank of America Securities chief investment strategist Michael Harnett said the Bitcoin rally looks like the mother of all bubbles, alluding to the fact that all bubbles eventually burst. I would tend to believe someone like Musk, who really has no skin in the financial game but backs these coins anyway, versus these money men whose jobs are literally on the line if Bitcoin does become the force that it has the potential to be. Where do you see the future of Bitcoin going? Let us know below. And what about other coins then? Stay tuned. 2021 hasn't just been a huge year for Bitcoin. Several other tokens have seen massive gains, like Ether, which has rocketed more than 360% this year alone. That seems huge, right? But what about Dogecoin? When Elon tweeted about this one earlier this year, it increased by a whopping 12,500%, making a lot of people a lot of money. Pity we got in on that one a bit too late. Did you get in on this before it shot up? Mark Cuban, owner of the Dallas Mavericks, certainly did, unsurprisingly. An analyst in the UK likened the rise of Doge to fool theory, selling to people willing to pay a higher price for overvalued assets. I wiped my tears on that one. Another coin to make huge strides this year was Shiba Inu, the meme coin which began life as a spin-off to Dogecoin and went crazy after Elon Musk tweeted an image of his own Shiba Inu puppy in a Tesla. It's crazy how one man can influence such a heavily backed market just by tweeting a silly picture. When stunts like this happen, it's hardly surprising the authorities want to regulate market. At the same time, though, banks are starting to sit up and take notice, with some even testing the water as to whether they can issue their own digital currencies. The Bank of England itself, yes, the same Bank of England who said Bitcoin had no future, has even launched its own task force with the goal of exploring whether they could launch their own digital currency. Bizarre behavior from the English English bank. Next up, we're discussing reports that Bitcoin could become far less volatile in 2022. So as we know, 2021 has been a huge year for the crypto space, particularly the daddy of crypto, Bitcoin. But what does 2022 have in store for the first ever cryptocurrency? Bitcoin currently sits at just over $49,000, up by around 2/3 since January of this year. Insane! It's not quite recovered from November's dip, but the signs are there to say it's on its way back. There are also signs that next year could be a touch more stable, which will be good for our collective blood pressures, right? It has been suggested that next year we'll see additional EFTs launched, but will this mean there are less stormy waters ahead for the market? We sure hope so. There are many heavy hitters now involved in the Bitcoin and crypto space, including people like George Soros, who could see the obvious value in it. As more and more people like this, influential people in the monetary space, adopt cryptocurrency, the more legitimate it will become, and legitimacy ultimately means stability. The key thing in the early stages of crypto is for investors to learn how to stomach dips and ultimately ride them out. We have seen the market correct itself after a dip many times, and if investors panic and take out their profits, this can cause a ripple effect in the market. Another thing that will help the market is the increase in larger household name businesses buying up cryptocurrencies. People will be more likely to trust the markets should the big players continue to get involved, which again will stabilize the market. Some news which could be construed as Chinese hypocrisy is up next. Stay with us. It was reported yesterday that the state news agency Xinhua would be issuing an NFT collection which depicts glorious photographs of the country's past, as if things couldn't get any weirder out of China. What makes this so strange is the fact that the Chinese government is in the middle of a crypto crackdown. So begs the question, why is it okay for the government to get involved in crypto, but citizens are being warned not to invest? Communism at its finest, right? The news agency will be releasing 11 photos, each with a limit of 10,000 copies on Christmas Eve. Unsurprisingly, there will be a photo which commemorates the 100th anniversary of the Communist Party, the same party which killed millions of Chinese citizens during Chairman Mao's Great Leap Forward. Irony at its finest. The idea will be to imprint digital memories into the metaverse, the agency said. In what could only be described as lunacy, the government-controlled media has in the past called the VR space an illusionary concept. Let's just buy a load of NFTs then, right? The collection will be available on blockchain Tencent Cloud. Will you be rushing to buy any? Let us know below. As always, thanks for tuning in today, and remember to swing by next time. Also, why not hit your crypto-loving buddies up with our video? Bye, guys. Video.